Okay, cool.
Yes,
Cool.
share your screen.
Bank Nifty, let's go. So what I'm gonna do is I'm gonna put an EMA, BMA, whatever on it. I'm gonna put a weighted moving average on it, and I'm just gonna smoothen it out so it doesn't look like this. And I put the style a little bit thicker. I can also choose the line, I guess. Line with breaks. Line with breaks, no, doesn't look good. Step line, doesn't look good. Crosses, doesn't look good. Areas, wow, this looks even worse. Wow, this looks all really bad. Okay, we just stick to the lines and we put the somewhat yellowish. So we go here. We go back. This is the macro chart, right? This is the macro. And we don't know what's going on in the Nifty. We don't know. This is the open. Wait. We need to do the close of the Nifty here. The close. So the close is more important. So you see the yield is actually. Wait. Gotta go back. Gotta go back. So I don't know why it's not showing here now. Not because it's too low, but maybe there was some bank holiday or something, because here it's starting to pop up again. But anyway, okay, let's just continue. Let's zoom a little bit out. Now from this day, you have this type of structure, right? You have this V shape. So you could say, okay, the yield is to the upside. I'm going to buy it. And when it flattens out, it's a certain point. When it starts to flatten out, I'm going to sell it. But this is not accurate. You see, that's like, I have to maybe just not put an 48 on it, but 9, then it looks more choppy. But this is just madness, you know, like I can't trade this personally. This looks better, but what I believe is really the EN10s minus the EN2s, they must give something. They must give a little bit of value at least. It doesn't mean it's much, right? But at this point, actually, you see, if you look at it like from a standpoint of just gonna go back. You know, value is not even the focus of this whole stuff here. So we just put value off, you know, we're just gonna continue with our levels. We just have to first we have to get our levels right before we trade anything else. So here, for example, we just mark out the levels real quick, and then we can look at value maybe for conflict. First, we get our levels right, okay? Level here. This is another key level. We can mark out both if we want to, because it's high volume, right? And you can see this pins you perfectly into this day, and it just goes. So when you see this, you can take a look at your value. You can take at your oil chart at this present moment, and well, oil is not giving anything. The EN10s, 2s, what are they doing? They're somewhere chilling up here. The EN10 alone. Indian 10s are doing what? What are you doing? It's the same curve, you see. It pops up higher from this day, so the value is up. Goes. Eventually it drops off, but price is rallying until it correlates again. So this is your C liquidity buying opportunity, right? Because it takes out a little bit of C liquidity here. It's not really seeable, but you see it pins it. And this is the open of the day. So what you can see, what you can look for, of course, is a lower time frame, and then look, okay, what is happening in this type of price action, right? Wait, you just have to look for the other key components. Like this is a 1 hour chart. You would never trade the 1 hour chart, right? I mean, you can take a trade of the 1 hour chart, but you won't execute on the 1 hour. You would execute on the 1 minute, 2 minute, 3 minute, 5 minute chart with the high time frame key level. And look what happens. Boom, go to the upside. This is your trade. Your trade is done, you know, like 2 days of buying. Enjoy your week, man. Enjoy your week. Again, same stuff. You mark out the open of this candle here. You see, it pins it above, takes the liquidity, stamp your pin bar. You can try to sell into this, of course, on a lower time frame. right? Low time frame sell. Look what happens. It sells off. You close the trade. You did a daily trade. Next day, I put the Indian tents away. Don't like it at the moment, at least. High volume, right? High volume candle, pin bar at the top. We mark that out. I don't know what's gonna happen. We're gonna look for it. What happens? We pin it. We pin it. Next day, what happens? Oh, what a surprise! What a surprise! We sell off. Oh, what a surprise! Right? It's almost like, wait, hold on. I did this wrong, actually. Just never mind. Never mind. This I have to mark it out like this to make sense. So this is not the sell actually. This is the sell here. Once it comes into the next day, you would like to sell into the close. This is your sell. It's
so mark open or mark close?
the close of down candles, the close of up candles.
So what about supply and demand concept that you teach later?
This is the same. You know, it's always about the candle itself. This is what Ray is teaching. This is on RGL. It's the high volume close, because most of the time the algos will deal at the close and we don't know what they will deal until we come back at a later time. So at this present time, this might be a reversed buy, right? And it is. I mean, you can trade it for 1, 2, 3 hours, 4 hours maybe, right? But once this level gets busted, right? Like here, and it holds below this level, it becomes a sell side level actually. Like, look, it pins it once, right? This is better than the previous levels because you don't always get the open. The open is more of a catalyst trade. It's like, if you mark this out, this is more like a catalyst trade. You can trade this, but it's like the, how can I say? It's the more dangerous type of trading.
Okay.
This is like also your 50, you know, like if you take swing high, this becomes your 50 bit or 50 hold, I could say. I wouldn't take this low here, but I would take it like this, right? Because you see the 50 hold here on this day, it opens down. So when it opens down, you already know, okay, we're probably gonna have a down day, and we pull back into the zone. We just sell it here and look what happens. We go down all the way to -5 and we pin it again. So now we have these levels. Now look what happens. We mark out the open of this candle. I'm losing my voice, man. Whew.
Actually, what happened in my market, always high volume come at the open. So I should always mark that open candle.
Yeah, you can do that. You can definitely do that, because if you see this volume here,
take some water first.
it's basically the same, right? This level here. So it opens, yeah, high volume, but sometimes you don't get the high volume at the open. You see, sometimes this is the open. Okay, this is the open. Most of the times it is the open. Sometimes it's not. Like, this is an instance, right? But do you see where this level actually comes in, right?
Yes.
It's an old level. It's like this old level here, from back. So you have short-term levels, right? Like this here, for example. Like, look what happens once we trade below this level, right? We trade below it, and what do you see here? Is it fast money or slow money?
Slow money.
It's slow money. So you know, okay, when we go slow money into this type of volume area, we probably get a fast money move up, and this is what we get, you know. You don't
But
even
that
have to
slow
look.
money did not take in the liquidity.
Yeah, it
So
didn't
what
take the
if I
liquidity.
was waiting for the liquidity takeout?
You can actually just bid into the lows. It depends on what value is saying. Like, sometimes value is so good. In this example, I don't know if it's good. It looks like it's good at least, but if I go back, like with value this good, right? If you have this good value here, like let's say we just saw it like this, right? You would just buy into the lows, right? It doesn't matter which low you buy. You just buy, because look at the line itself, right? At the behavior of the line and price. You see it?
Yes.
it's behaving the same way. It's not, it doesn't have to stick to price. This is not the key concept, but you have to look at the divergence between, is this a fast move in the yield? Like, is this a fast move in the yield? It is, right? Is this a fast move in the Nifty? No, it isn't. So they're probably holding price down to accumulate enough size to get on this trade, right? And look what happens. Prices going up, prices going down.
Discount, yes.
Prices are going up, going up, going up. Boom. At some point,
So
they're
actually,
starting to
that was
correlate
my
again.
discount level, discount that you teach.
Discount.
Yes.
The Nifty is not at the Nifty is at a discount at this point. At this point, you got no discount anymore.
Yeah.
This here is
That
your
was-
discount basically.
Yes.
And then look what happens. Look what happens. Prices coming down. Prices are the Nifty. This is still high because look, we're not actually making higher highs. But now look at this drop here, right? You see the drop in the Nifty. You see the drop in price. Slow money. The Nifty is opening up, of course. Big bullish candle. We say the first candle of the market is a directional candle. So the open is important. How does it open? How does it close? It opens aggressively up. Of course, we get an aggressive update. This is more like a bearish day now because, okay, we have this liquidity here. So I would target this liquidity at least. I would like to see this liquidity getting targeted. Yeah, for example, just like this, right? And now look what you have on the Nifty, right? You have a big premium now, right? Just a big premium. Now you can sell into the highs and look what happens. You sell into the highs, you sell into the highs, you sell into the highs. Imagine selling every green up bar here. Okay, on this day, this is just, you get screwed, right? But it depends what you do. If you take profits, if you sell this candle here, if it closes, this is a 1 hourly candle. You always have to think about the hourly candle. This is almost every green candle gives you some type of trade. Like not all the candles, but most of the candles. You don't have to take every trade. I'm not saying you should sell everything, but you just have to be mindful about see liquidity, you know, like see liquidity, green candle, sell it. See liquidity, red candle, wait. Open, that level is key. The level is key. You don't want to sell above this level actually. So you just wait, And look what happens. The Nifty is starting to, the Indian 10s are starting to improve. So it doesn't give you a real trade. I mean, at this point, at least not. You can sell see liquidity, but I wouldn't do it personally. And then you have here this next volume area. Boom, get this area here. Let's see what I do. I have to let this here. See, we're still holding, we're still making higher highs. I bet we will drop off at some point because now the yields is diverging extremely. Now it's pulling back up. So again, no trade. But you see the selling coming in to the top edge. It's a long top edge. You see how long this top edge actually forms until the sell somewhat develops. Like you would have faded the level once. Oh man, this arrow is way too big. Like once,
Accumulation.
twice. This is a long accumulation, like real long. 3 times you would sell into the highs and it would just. This is an hourly chart, man. Imagine this is over several days, right? This is like 1 week of accumulation until it eventually goes down, right? Eventually, until this point here. But you can also see this here is actually starting to make higher highs again. So you have to be mindful of that from this point on. This point, this is not making any lower lows. So you would be really careful with this type of trade because if you look at this low now and just think about it, think about this green up bar here. Yeah, this is the green up bar. This level is still key because now you can still look to buy this level and look what happens. You can buy this level. You see it? Because we're still buys it above, yet the yields is way down, but you have some type of structure now on your trade. You have 2 levels, like this level here, this mid figure, this key level, right? And we know this is a key level because it was key before, right? So you just look at these levels and say, you know what? I tried to get a trade on in here. I tried to buy it. And you are successful. You know, if you take this swing low here and mark this out, this is holding, right? This is like somewhat of a trade structure. And if you, of course, go onto the daily and the Nifty, not on the daily, but if you scroll down, the value is non-visible almost. So you have to maybe focus more on the structure of the Nifty.
Okay,
So-
man, leave this Nifty. I don't like now. This is
I mean,
when I read like
I mean, just look at the technicals, right? We just look at technicals. But look, maybe you didn't get the sell, right? But what you can do is you have now the high volume candle in here, right? This high volume candle in here, it pins this level here. You know this is a key level. You have another key level, and we make now this lower low accumulation type of thing, right? Because look at the volume, look at price, right? Until this low here. It's a bias auction.
yes.
And this is what trading is. Trading is subjective. Like I see something different than you, and this is good. You know, you don't have to
This
see
is
the same thing, but
this
we can
trade is like 100% when this is a stopping volume, if you can see, and price is accumulating down and volume is down. This is like perfect trade for my market, what I observe.
yeah, like the volume is important, the price action is important, the levels are important, because what do you think when I don't have to, I can eyeball it, you know, I know this is I know this is the 50, it has to be the 50. The market doesn't care, you know, I don't have to draw this FIP anymore because these levels are just that good, you know, they are that good, man. They are that good. Like when you see this swing low, this swing high, you see this pullback into your key level, man. I have to write it out, man, just for you to remember. Key, you know, like middle center. You can't even see it, man. Okay, doesn't matter. But you know, right? You have this on your chart from when? From 1st of February, and now we're in June, and we test this level in June, and we pull back strong. This is a macro. So what are they doing from this level, from the 50? They're probably buying it. And look what happens. Boom. You get the perfect trade. You get this pin bar. This is your exit, right? And it's your exit and a new key level. Look. Mark out.
Then what
I
to do?
did wrong. I did it wrong. Did it wrong. You have to mark out the close of the candle, not the open of the candle. So we did it here, I think. Yeah, we did the close of this bar. We saw this seller's auction coming into this low. So if you don't want to be aggressive and buy this lower lows all the time, if you see this lower low and you don't want to buy it, wait for the 50 pullback, because most of the time it's the easier trade, because you will have a pullback into a key level and the 50. These are two good confluences on your higher time frame. I mean, I would just do a blue box here just so I can maybe go later on and go there into on a lower time frame, you know, on a 1 hour. But look, this is again the pullback, right? It's still the key level. Now it's this key level. It's like both of these, right? And then we push up to the upside. We fail to break this high. Eventually, we get like some paycheck here. But look what happens to the paycheck, right? This like real paycheck, because we just chill here for a bit. This top is on low volume. Do you see the volume at the top? It's non-existing compared to the bottom volume here. So if there's no volume, there's no trade, right? There's no trade, and look what happens. Boom, the price is just going down. Now we just focus. The open comes in here, right? This is the key level we had, the green level, this key level here, this volume level. So we just draw it horizontally here, this key level. We trade here, and look where we stop. We stop right in here at the open. We pull up high, we stop here. Why do we stop? Only because we have no volume anymore. So what happens? Boom, we sell off aggressively back into this line. We hold this line, we hold this line. Look what happens again here. Key. Do you see it? Pins, it goes. Pins, it goes higher. Why? Because it's key. You can see it's key because of the times it's traded through, like once, twice, 3 times, 4 times, 5 times. And if I go to the right side, it's probably going to trade another 5 times into this level. Like, I would just, okay, there is no, actually, no. Okay, good. I like it because this level is now just gone. But when it comes back, eventually, I don't know if it will ever come back to this level. It's like hard to imagine it comes back. But look what we did now. Like, we analyzed one trade from just one level actually. Like if we just drew some stupid lines on the chart, you see that? And there is actually one line that stands out big time. And this is obviously also the highest volume from all these volumes, you see? It's like the highest of all these volumes because there is no such volume as this one. Now, if I would just delete all these lines, right, and just go back to this volume, and just draw 2 squishy lines, right, 2 squishy lines into this level here. Would you say you have a good level to trade? Would you say you have a good level to trade? Like if I just do it like this. Imagine you're a macro trader for an institution, right? Imagine you buy here, right? Because your macro bias must be bullish because if you look at the risk line, for example, if you take a look at the, where is my risk line? Here the ES against the gold, right? And if I just scroll back in time, scroll back, I have to adjust it somehow. You maybe didn't take this trade here, but you certainly would have taken this trade here and this trade here, and this is what institutional accumulation looks like because look at it, right? I mean, at some point, this is what institutions do. They search one level, they get one good level, and they know, okay, when we come back, we can try to take out all the people who are weak-handed now, because if you take this swing high and this swing low, right, and take approximately a 50, look, it's close to the 50, and even if we take this low here, right, if we just shift the 50 up here, we have a 52, right, on a 1 hour. Like, I have to wait, settings. I have to remove the session breaks for this one. But, I mean, can you see it? Is it hard to see where the buy is happening above the 50? Buyers above the 50. What's going to happen? This is the macro view, like the 1 hour. Like you have a key level. We buy from this key level, and the market is always having fast money moves up, and slow money moves down, right? Like, of course, if you just look at this price action, right, you don't see this big picture narrative. Like if you look at this, but if you zoom just out a little bit and just try to understand the bigger picture, right? Swing high, swing low. We get this 50. We react from this 50 really aggressively. We come back, we pull back, and we hold and we hold. And from one certain point, you just think, hey, from this point here, when it rallies like this, I just buy all the higher time frame C liquidity. Look, we get a C liquidity trade here. We get a C liquidity type of, not actually C liquidity, but this here. C liquidity. Boom. Oh no, this is a 1 hour, right? This is a 1 hour because we are above the 50 and we just keep holding. And this is now the 25, right? No, this was 25 actually. But of course, this is just your structure. But every C liquidity, look what happens to every C liquidity we had here, right? It just gets bought up, it comes back, gets bought up. Like if I even mark out now this high volume candle close and I just draw it out in time, even this gives you a confluence of the C liquidity. Like check it. This is your level, right?
Yes.
Look, it's buy side above, sell side below. There is no actually sell side because it pulls back, it tests it here. Look at the test, right? Boom. It goes higher. It makes a higher high. It actually stays above it for a period of time. We take out C liquidity again. Guess what you're doing? You're buying again because this is high volume. Look, 530. This is the open actually into the zone you get your narrative right, and this is the macro picture actually of the Nifty, right? And now we have this key level here, which is you can, oh no, that was 1 0 too much. You can have it like 550 or just 500, and we're close to that level, right? And of course, you would also mark up the 40,000 because the 40,000 must be a key level for hedges because I always forget that I have to do it wrong. This is just your macro, and now of course, look, this is why they go for the squeeze, right? Because they are sellers at these prices, and they're front running the price. But institutions, they don't like these front runners, so they will just squeeze them and squeeze them. And you like to see this because these are now fast candles, and now we can, once we have the past, right? We have the past now done. Now we can say, okay, what is the Nifty on a 1 hour chart? Is it a premium? Is it a discount? At this point here, it was a premium, right? So look what happens. You sell the C liquidity and you get a good trade, you know? But the Nifty starts to kick up from here. So look at this discount here where these arrows are. You see that? Like, of course, if you look at the real-time feed, like this, right? This is higher, high, higher, higher. But this one, this is like massive. This pie trade is massive. Like, look at the value on this. And then when it pulls back, the yields are still higher. It doesn't make any lower low. It pops up to the upside. At this point here, at this down candle, key level, you know, okay, it didn't hit the key level, but it's close to the key level and it's buy set above. So we go buy set and look what happens at these highs, right? Price is dropping off. So you sell the C liquidity here at the highs. Boom, sell it. It comes back. It doesn't even come back here. It comes back one more time. The value is still lower. Sell it. If you can see it, it doesn't mean you sell any C liquidity. Why? Because look at the price action on the C liquidity, right? This is a strong candle here. Do you see it?
Yes.
You can't sell a strong candle into the, you can, but there is no pin attached. So you have to look at the candle itself as well. So this is more of a demand bar coming from this level, right? So it's buy set above. You can't actually sell this candle here, but what you can do is you can take your fib out, you can mark your levels, you can say, okay, this is approximately by 50. You get your -1 trade, right? Like here, you exit your trade and you just look for the next stuff. And now we can just build an idea, right? You can just say, okay, wait, let me take a sip. My voice is cracking up. Okay, now we can start to build an idea, right? Because what do we have here now?
Now what to think in present situation? Low volume is down, sellers auction type situation building.
Yes, sellers auction type situation, and this is correct. So this is a macro. We have to think about this as a macro. This could be a multi-million-dollar trade, not for us because we don't have multi-millions, but for banks. Banks see this and they say, okay, what other elements do I need except the seller's auction? I need a level where liquidity is, right? So I need key levels. And we know that these are our key levels, right? One of these two. It doesn't matter. It would be better if the market just opens up aggressively into this here and sells off, you know, like we don't know what's going to happen, but it's likely to reverse when it goes aggressively and fast into this because people they have like no time. Maybe the banks they accumulated here, right? They sold a little bit here and they sold every higher high now. For example, this year let's say they're selling, right? They're not actually selling because the yield is actually way higher. So we don't say they sell yet, but there are some sellers. Oh man, this meeting is ending in 10 minutes. Okay, we just kick it here now. So we look for sales actually because we're an institution, right? We look at this level here and say, this is where I want to put my most size in. And then we can go to the 15-minute, for example. Now we can go to the 15-minute. And you see, it's not very far away, right? It could be just, again, another day like this here, like this expansion move projected to the upside. We would be there, right? And this is what you can do. You can take the swing high, swing low here of this. This is not a bracket because this was a trending day, but you can see this is approximately the -1. So
Yes.
of this measured move, yeah, sure. We don't have to go there. Like I said, possibility. It's about possibility.
So
But
US oil that I observed, uh, what do you think about that?
you have
Like
to
same.
build your own idea. I'm just saying, if I want to be a seller, I want to be a seller above, not at the key level, but above the key level. It can go all the way to 50s, you know. We don't know, but this is an area where you would like to see elements. Here you start to look for elements like value divergence, CLIC, volume, RGLs, these levels which we have drawn out, you know, because these levels are working not only in the H1. The H1 is of course the highest time frame, but let's say we mark out this candle close, right? This here on the 15-minute now. Look what happens. Look what happens. Do you see why it's a key level? Do you see it?
Yes.
Do you see the price action around it? Because this is what the day we talked about. The 50. It's the 50, right? And look at the projection. It's just really that good, man. It's really that good. So mark out exactly like this, the close of the candle open at the highest volume. It's gonna be the open for your market. And look what happens to the whole situation. Like I just mark out the last 3 days, okay? Just for the last 7 minutes we got. And I'm gonna let you go. I'm gonna let you back test this.
Okay.
And yeah, you're just gonna show me then what you could have made from it, like in terms of trades. So we see we're all above, right? All above. Just this is on a 5-minute. On a 5-minute. Now we take a look. We have this key level. We can adjust it. Can adjust it. Do you have buy trades below this level? Yes, you have. Yes, you have. Yes, you have. We go below it. You say, okay, let's see. Look, do you have a buy trade below this level here? Yes, you have. Look at the rejection, right? It's also the London. It's also the London Open. It's the 8 o'clock hour, right? And look how big this candle is. It must be most of the times a reverse candle. Every big large bar, right?
Yes. I know
So
this.
reverse the bar. Look, small candles, directional. Big bar, non-directional. Boom, goes down. Big bar, non-directional, goes down. Now we keep going. Look at this level here. Is it a buy opportunity? Yes, it is. Is it a buy opportunity? Yes, it is. Is this open, this close, open, whatever? I don't know if you can on a 15-second chart. Can this be a buying opportunity? You have no chance. You have like no chance to buy it. You have to buy it here. You have to buy this 15-second open here, right? You have to buy this price here to get into this whole move. Do you see it? It's a 15-second chart. This is how
Yes.
fast you have to be to trade the open of your stock line. You have to take a look at this, say, whoa, what is this close? If this is the open on the bar, it must be bullish. And it is a higher hold on a 15-second. Look. How can I make this stuff up? You know, it's just an algorithm. And then you have your -2 projection at the top edge. You say, well, cool, okay, if I take this entry, where's my exit? Where's my exit? Where's my exit? My exit is here. Look at the pin. Look at the pin. I can't make it up, man. Like, let's go back to the 1 minute. Because you obviously would never trade the 15-second. Maybe you would, I don't know, but do you see the trade now?
Yes, actually what I did in paper trading, I buy the open.
Mhm.
In paper trading, I buy the open that I send you screenshot. This
Okay.
day.
You don't have to always buy the open. It depends how the open is forming, but it's about these levels, man. You see these levels are not there for fun because not an order block would get this price so accurate. You know, look how it trades into this. Look at the rejection from this level, right? 50 pullback, you know it's a 50 pullback. You see this hold of this level here, and look how perfect. This is a 1 minute chart. Look how perfect it holds this level here. Like, how would you know? Like, how would you know? You can't just, because look, I draw the level out from here, right? From this point. I drew it out here. I don't know if it's gonna trade. If I draw this out, the open out here, I don't know if it's gonna trade, but if it's gonna trade like this here, and it's not coming below the 50, it's taking out this liquidity. Perfect. You want to trade this, you want to buy this down bar. Look what happens. Boom. You just go. You just go. Guess what? You get a little pin bar. Maybe it shocks you out. I don't know. It depends. But look how closely we pull back to this level here now, to this bigger line here. And eventually, we don't even get there. So what we can do is the next big volume on a 1 minute chart. In the last 2.5 minutes, look what happens. You get some nice sell trades, right? For what? 15, for like 30 minute, boom, sell trade here. Now look what happens. We start to hold this level. We're getting green candles into this level. We start to hold above here. And you say, this is no good. This is not a good sell. This is not a good sell because we took C liquidity out. We rejected the C liquidity. It's probably going higher. And you already have your, if you would have traded this trade here from top to bottom. -2 projection, you already know, okay, my trade exit is somewhere in here. And imagine you would just bought here, sold here, for example, a little bit of your portion, right? Bought here again, sold here, maybe bought the C liquidity and sold fully here. Like, and the rest, maybe you just missed the rest, you know, it's possible. You will never catch the big moves. It's like, you always have to be mindful of taking small portions every day. Look, this is basically 1 day of trading, right? And it is somewhat similar to ICT's accumulation, manipulation, distribution, because on a bigger picture, of course, if you just look at this price action, you see accumulation, manipulation into this low, high price, very high volume, come back, hold of this level, higher, hold of this level, higher, just gone, no trade, ripped. And if you take this low, the swing high, you have your -2 projection, and guess what? This trade made a killing, right?
Yes.
I mean, I don't do this stuff on the Nifty, you know? I don't make it up. Like, this is always what I'm telling you. I'm not making this up because I'm seeing the same stuff on gold now. If I just show you, I just have less than 1 minute. We will just restart the meeting, okay, for like 50 more minutes, and then we're good, I think. Then we again
Actually,
like,
gold is opposite the Nifty. So if gold open gap down, so I can guess that my price will go up. This is also could be.
I don't know. Eventually, I really don't know. But you know what? We will just take a look at it anytime soon, okay? It will just